Hello traders, welcome to this tutorial. My name is Nelson and I would like to take you through the Fibonacci retracement tool used in Forex trading, either Forex, crypto, or any analysis that you're supposed to be doing in the markets. So for example, this is a tool used to help us get to where the market will come to before it goes to the other direction. So for example, if the market was going downwards, then change the direction. This is where this tool will help you find the entry. So it's very simple to use and just clear. So for example, in the first place, I want us to see these values. We have 0.0%, 23%, 38%, we have 50, 61, and 78%, also 100%. So in this situation, we are supposed to be using between 50 and 61%. This is where the price will reverse back to before it's going to the other direction. So let me show you an example. For example, we have this market. This market has been downtrend. It has been downtrend this way, and this one, since it has been downtrend, we know that we are identifying the key levels before we get a decision that we are saying that we are going to buy or we are going to sell. So for example, we have this situation, and this is a key point. We can see this is a key point. This is a key point, and we had the something like order block at this point. Can you see that? So let me just draw. For example, maybe we use an order block like this one. For example, let's say this is our order block. I know this was the effect. This was affected by news events, so maybe it was not able to recover and go back to this point. But you are supposed to also identify this kind of point. So at this point, we waited for the price to come back to, then it buys. So so long as you know this is a key point in the market, now what you have to do is to wait for the price to go back. After the price go back that way, now it will come back for a pullback, then started buying. So what we have to do is to use Fibonacci retracement. So I want to show you that. So for example, let me just do this. In the first place, I want to see the settings that are in Fibonacci retracement. Let us see the settings in Fibonacci retracement. We have this 0.23, this one. So it's now expressed in percentage. So one thing you have to know is that this is not the real trading view. I'm going to share the video for using this application or website without paying for. You are supposed to be using it without paying. So what you have to do is that just subscribe and I will show you that. So for example, let me take this example, and I want to replay this one. I want to replay this. No. Yes. Okay, let me just complete, and then I replayed at this point. So I want you to imagine that the price had reached this point. So you bring your Fibonacci retracement. Make sure that 100% mark is at the key level. At the key level. Let me hope that this is very clear. Then your buy entry, place it at between 50 and 60%. Let us confirm that. This point, you place your entry at that point. The stop loss, let me show you where you will place your stop loss so that you cannot lose this trade. You cannot go in losses. Let me hope that you are seeing where I placed my stop loss. my stop loss is placed at 78 or 79. It's 79%. So where we have to buy is at this point. We have to buy at this point. Let me show you. This is where the price will go up in between 50 and 61%. Let me play. Let's wait the price for the price to come back, and we just took a buy at this point. Can you see that, guys? Can you see what's happening? This is what's happening, and you just got that market. Can you see that? So there is no need for you to lose these trades. It's just simple, and you just have to wait for an opportunity. Just simple. It's simple. So what you have to do, let me just see another example. So this is another example. It's not far from the one from this one. So this is another example. So what we have to do, let me just do this. Let me just do this. Let's wait. So this is the lowest point. The price has gone, and we have to wait for the price to come back and sell. Let me just show you. Place your 100 mark at the key point, then drag your Fibonacci retracement to 0. Place 0 mark where the market has reached at that point before reversing. Then you are supposed to place your orders in between 61 and 50. Your stop loss at 79. This is what you have to do. So let me check. Let us check the market what will do. Guys, so you have seen what the market has done. So there is high probability the price come back to 50 and 61%, and once you place your stop loss at 78, then you will be at a safer place. I want to show you the last example, guys, and I want you to be keen on this. Be keen on this, don't miss the last example. I want to show you very serious one. The reason I'm telling you that this is the most important one, I want to show you the reason why you are using this Fibonacci retracement. The reason being is that you are supposed to be knowing that there must be change of character. For example, this point, make sure you have seen the change of character before you are doing so. This is the change of character, or what we call the market structure shift, because I'm trading using the ICT and SMC concepts. So what you have to do after the market has changed the character, then identify this point. Make sure you don't assume. The market has changed the character. So let me place this at the last tip at the key level. Do this. Make sure this is in line and the candlestick has closed above. Make sure that you understand this. Okay, now what we have to do, we wait for the price to come back to 60 and 50%, 61 and that. So let's make sure that our stop loss is at 79. So what we have to do is to wait for the price to come back to this zone and put our stop loss at 79%. Let's see. Wow, guys, it's amazing. It's amazing to see this. It's amazing. And this is not used by only this, it's not used by this currency pair alone, and it's used by other currency pairs, for example gold and other currency pairs. Let me try it on gold. Or okay, it might be okay, but let me try it once on gold so that you can confirm that. So guys, this is gold, and it is used at this point. So let's check that point, place our Fibonacci retracement. This is after the price has just completed changing the character. Don't assume this point. So we wait for the price to come back to 50 and 60%. Then our stop loss should be where? I've just told you that. So guys, don't assume. If the content is educative, if you have gained something, bless me with a subscribe, comment with a question, tell me what you want me to do for you. I love you guys, and success.